Hey guys, it's Jim. It is Thursday afternoon, the almost the middle of June, and I am joined once again by Bill Weakley with Advanced Financial Group, and he's going to welcome Bill. There he
That's
is.
the sign.
That's the sign.
In the office today, not at home. So, hey, there's progress.
Good to be back in the office.
That's right.
So that means you're working. That means you're giving money away. Tell me what the interest rates look like.
Man, they are, I thought they were low a couple of weeks ago, but helping a nice young VA couple today. And I thought it was a typo on my rate sheet when I priced their loan, but we're right around 2.5% with no points.
On a VA loan,
Yeah.
no
And
point.
now these folks have really good credit. They've got upper 700 credit. But I've seen lower, or I've seen upper 600 credit at 2.625, 2.75. So you don't have to be immaculate to get a really, really great interest rate with a VA loan. So they're fantastic. And FHA is right there with them, just about the same mid twos, and then conventional is right around 3%.
And what do you and what's the price point that you're quoting 2.5 at?
So this was a $300,000 purchase, and that you can see that consistency go up to 510, 400, which is the county loan limit here for 100% financing. Once you get above the 510, 400 as a loan amount, you are in the jumbo VA loan territory, and then some, a little bit of a hike in rate, but not much. 3 point, right around 3.125, something like that on a jumbo. So that's still really good.
So we're definitely going outside of our current market today, or normal to average market, but the ceiling on the VA loans has been lifted, correct?
If you have full entitlement, you can buy a house if you qualify well above 510, 400 with no money down.
Wow.
I just ran some numbers today for a 950 purchase and no money down at 950, and they qualify. They have full VA entitlement. They don't have their VA loan tied up on another property or used up in a prior foreclosure or short sale. I mean, they've got full entitlement, free and clear, $950,000 with no money down.
Wow. All right. That sounds like another. Maybe we'll talk about that in a little bit more depth. So in that $300,000 price range, Bill, I mentioned earlier to someone that I reached out to an agent. They had a $240,000 property, multiple offers, bids due in no later than noon today. What can you on the money side help a buyer do to compete in this market where there's multiple offers in this price point under $300,000?
There's a couple of things you can do that are game changers, and my clients have won bids because of it. So the first thing you can do, and I don't say this because I'm a local lender, but get a local lender. Don't use somebody. I mean, I'm on Lynn Haven Parkway here. There's 20 local lenders right here that live and work in the environment here, live in the neighborhoods.
5 iron away, sure.
5 iron away. We give you our cell phone number. So there's I have a lot of great colleagues that work on this little corridor here. Do not put yourself in a bad situation. This is all about winning. This is all, you're competing. This is not just, think of it as a competition. And when you're going into battle and you're going into competition, you need to be armed with the tools to win, right? So you got to be with a local lender, number one. Submit all your documents to that lender. Don't just have a telephone conversation where you're on the phone and the loan officer puts in all your information in the computer and spits out an approval. Get them pay stubs, bank statements, because you're going to have a conversation. Most likely that listing agent's going to call me and say, hey, how far have you gotten with these folks? I've got 4 contracts here. I want to pick the one that I feel the best that's going to get to closing on time with the least amount of trouble.
Bill, how far can you get with a borrower without an address?
The sooner the better.
Okay.
I mean, if you're not buying for 6 months.
Let me rephrase that. How far through the process can you get? How qualified or approved can you get a borrower without an address?
Well, that was my third leg of the three-headed monster there. We can actually take you through underwriting. So we call those a TBD loan application. That's a to be determined address. One of the reasons that many banks and mortgage companies don't allow us to do this, Town Bank and Advanced Financial Group does, is it takes people to process and underwrite a loan without an address. we're going to put that loan through the same process as we would a ratified contract. And we're going to give you underwriting findings and an approval, and that approval is going to be based on usually the appraisal. So we can get through the whole approval process. So when that agent calls me, sitting there at their dining room table going, hey, I've got full price offers, Bill. What can you tell me about your clients? I can tell them a lot. I can say, look, they've been approved in underwriting. And most of the time when I say that, I get a like 10-second pause from the listing agent, and they go, what do you mean? How do you put a loan through underwriting and have approval if you don't have an address? Well, we are allowed as loan officers with that company right there, allowed to do that. It's a commitment that town in advance has made to you know, the client, the agents involved, to let them know that this is going to be a solid deal. And hey, you can even push the envelope on closing at that point. I mean, most people, the first thing you see at some of these websites when you go to the lender's websites is, hey, due to high activity, our response times may be longer than normal. Like, that's the first thing on the webpage. Like, how great of an introduction is that? Hey, everything's going to take longer. Okay, by the way, I'm, Bill. It's just a horrible example of how to, first impressions are everything.
So work with a local lender, get your paperwork in early, and get a TBD approval.
Yes, push it through underwriting, and you just be sitting there waiting. And when I love when I get that phone call from the listing agent and they say, Bill, how are these folks? And I can't wait to tell them that they're already approved in underwriting. I know that my clients are probably going to win that deal. The biggest fear a listing agent has, right? The biggest fear a seller and a listing agent has is the deal's not going to close.
Okay. Hey, I got to pause for a second.
Go ahead. The plumber's here.
Yeah, exactly. So Bill, all of that sort of ties in with the current market. What is going on in the refi market? I have a lot of clients and a lot of associates and friends that are saying, hey, when should we refinance? I've been reaching out to them, suggesting it, but there's others that are calling me. What's going on in the refi world, and when's a good time?
Well, to give you some numbers on what we're doing as a company, we are usually about a 90% purchase shop. So Town Bank, your normal matrix would look 90% purchase, 10% refi on a normal basis. And we are at 50-50 right now, which is huge. This is the biggest refi boom we've ever seen in our lifetime. And it's really people taking advantage of the market and unfortunately the pandemic that has caused in the economy. And rates, are artificially deflated, if you will, to kind of stimulate the economy and to continue the growth of the housing market, because we all know what happens when the housing market goes down the tubes is the rest of the economy comes with it. So we're trying to keep that from happening again. So many people, 50% of my business is now refinances. So most of the time you get a refinance call, it's like, hey, I can go from 4.5 to 3.75. You're kind of sitting there going, well, that saves me about $180 a month, and I don't know if I want to start over. The scenarios now have been, okay, I'm at 4, and now you can be at 2.5. Like, it's a no-brainer. It's like, yes, lock it in. Here's all my stuff. Close me. So most of the conversations have not been people debating whether or not I should or should not do it.
Bill, when is that a good idea versus a bad idea? Because there's closing costs involved. When is the break-even point on the cost of refinancing versus waiting because you're going to sell in a couple of years?
Yeah, that's a great question. So right now, most of my refinances are VA loans. Since we're in Hampton Roads, so many VA loans are here. VA has a streamlined refinance loan, and they have the veteran has certain protections built into that loan that do not allow them to be sold a bad loan, a predatory loan. You have to recoup all of your closing costs in 36 months or less, or you do not have a VA streamline. So there's some protection built in. We have a worksheet that we have to do that shows that, hey, I'm going to incur some fees when I refinance. I have to be able to recoup all of them within 36 months. Most of the refis go ahead.
So I lower my payment by $100 a month by refinancing. Yep. And so my closing costs can't be any more than basically $3,600.
That is correct. Or you don't have a loan. VA will not allow you to do it.
Okay.
So you have some protection built in there.
So what do you think the number is? Because there's plenty of folks that mortgage debt or refied or mortgage debt in the threes. When is it a good time, and when does it not make sense?
I get some phone calls sometimes, and they say, "Hey, Bill, we'd like to refinance. We're thinking about moving in a couple of years. We'd like to make some, we'd like to save some money in a couple of years." And ding, 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 red flag goes off. I'm like, "No, you're not refinancing. If you're
Gotcha.
selling in 2 years, you're not going to, you're going to increase your loan amount."
What's your rate?
So
What's your rate jump? What do you think is a good rate jump in order to make that move?
I think a no-brainer would be 1 percentage point. If you can
Okay.
go from 3.7, 3.75 to 2.75, that's kind of in the no-brainer zone. If you're dropping 3/4 of a point, let's make sure you're going to live there for a while to take advantage of those savings. And a lot of people get really concerned with the monthly savings on a refi. Obviously, that's good. I mean, if I can save somebody, I've saved folks like $500 and $600 a month. That's a BMW payment, right?
Right.
That's real money, right?
Or a Honda Pilot. Yeah.
Or a Honda Pilot, a little less than that. But it's the end of it. When you sell your house in 10 years, that's where you're going to see the biggest advantage of refinancing. So instead of paying 10 years of interest at 4, you're going to pay 10 years of interest at 2.75. You're paying more principal on that loan every month you make that mortgage payment at 2.75%. So instead of owing 210, for example, in 10 years, you may owe 190. There's $20,000 in earnings right there at the end of whenever you decide to sell your home. So it's the monthly savings that are important. You usually get to skip 2 months mortgage payments. So that's really cool. You get the balance of your current escrow account back after closing. So that's really cool. So usually if you roll in the 2 payments you skip, you roll in the balance of your escrow account back into your new loan, you haven't added any money to your new loan balance.
So because of the environment, we're hearing a lot of people get into the refi business, whereas normally it's only 10% of your business, it's up to 50% of your business. I see a lot of marketing dollars being spent on companies that are saying no closing costs. What do you say to that?
So that's a great marketing strategy. I would never say that, because I would feel like I'm deceiving my clients. I think I like marketing, and marketing's great, but that kind of marketing to me seems predatory a little bit, because 95% of all the closing costs in your loan are not to me, the bank. The appraiser has to get paid, the attorney has to get paid, the city and state get their taxes, the insurance company gets their money. You have a new lender's title policy. You have a flood certification. You have an appraiser that has to get paid. You have lots of people that have to get paid. And when you close a real estate transaction, whether it's a purchase or a refi, those people are not going to work for free just because your lender said there's no closing costs. There are closing costs. Those people have to be paid at closing. The way that that's done is through a lender credit. So just like points work, this is another whole conversation, but as a buyer, you can pay points, which is 1% of your loan amount, to lower your interest rate. They also work the other way. If you need money to pay closing costs, we can go the other way with the rate. So instead of 3, maybe we're at 3.25, and I can give you $3,000 to pay your closing costs. So that's where the closing costs are being paid. The closing costs have to be paid. Those people that do those services are not going to, the city of Virginia Beach is not going to say, hey, just because you're closing with Bill, I'm not going to charge you city and state transfer taxes. They're not going to do that, right? So those people have to be paid. They're paid through a lender credit. So you have to be careful when you hear those offers of no closing costs. There may be no closing costs rolled into your loan or to you, but there are closing costs involved in every single real estate transaction out there.
And do you think that those are covered in just higher rates?
I would say yes. I don't, yeah, absolutely. I've had several folks contact me that, said so-and-so, Bill, your closing costs are really high, and I say, well, I charge one fee in a loan. I charge a processing fee. Every other fee in there is to somebody else. So how can, and those costs are going to be what they are, whoever the lender is. Each lender doesn't get a different price for these services.
That's a good point. Those fees don't go away. They might be getting some wholesale discounts, but the fees are still there.
Okay. Yes, those people have to be paid.
So if it appears too good to be true, there's a good chance it is.
Don't fall for it.
Don't fall for it. Bill.
No.
Bill Weakley with Advanced Financial Group. Guys, I'm gonna wrap this up so that we just bring you short and sweet bits of information on what's going on in the housing market and in the financial and in the mortgage world. Bill's with Advanced Financial Group. I'm going to put his information down here at the bottom. If you got any questions for me or him, feel free. Please do reach out, and let's see how we can help you guys.
Thank you, Jim. Appreciate it, brother.
Thank you, sir.
All right, bud. Bye.